Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now it was a decisive day at the US Fed. It delivered on a 25 basis point rate hike as expected, lifting rates for the first time this cycle. Let's break down the key takeaways. First is that the decision to raise rates by 25 basis points was almost unanimous, though one Fed member did vote in favor of a 50 basis point rate hike. The Fed's median projection calls for a total of 7 rate hikes in 2022, including this first rate hike, and 3 to 4 rate hikes in 2023. However, the range of individual projections around this median was high, signaling several policymakers favor a further front-loading of hikes this year. We also find it interesting that the end 2023 median rate projection is now slightly above the Fed's own estimate of the long-run neutral interest rate, raising the question of whether policy is expected to turn tight in 2023. Now, all of this follows a sharp upgrade in inflation forecast and a sharp downgrade in growth forecast relative to the last quarterly meeting, though we would point out that growth forecast is still above what we believe to be the long-run trend economic growth in the US. And finally, the Fed said it would begin reducing its Treasury holdings at a coming meeting, which we think is likely the May or June meeting. Now, as we said yesterday, the market focus was likely to be less on the rate hike itself, but more so on how policy was likely to evolve through the rest of this year and next. Our key takeaway is that the Fed largely delivered along expected lines, perhaps even a little bit less aggressive than some investors had feared if the equity market rebound is anything to go by. In our view, this sets up the market to go back to focusing on expectations of above-trend growth and a strong job market, both of which are positive for earnings growth. We keep in mind that even the projected 2% upper bound Fed rate by the end of 2022 would still keep policy rates quite accommodative, below the Fed's forecast inflation level and below its forecast neutral interest rate. So that's positive for equity markets. Now, yesterday's rebound also helped keep the S&P 500 well above a key technical support level, further supporting the outlook for equities as its downward pressure gradually fades. We would keep an eye out on the yield curve, or in other words, the gap between the long and short-term bond yields in the coming months, given it is one indicator of policy potentially turning too tight. Though, as we said, yesterday's Fed decision shows this might be something to worry about in 2023 or later, not really this year. So a big Fed decision, but it wasn't just US policy alone that drove markets yesterday. Over in China, Vice Premier Liu He said that the government will actively release policies favorable to markets and take substantial measures to shore up Q1 economic growth. We also find it interesting that China also said the government would continue to support all kinds of enterprises to float overseas. And at least one media report said policymakers could be prepared to help resolve an impasse that threatened US-listed Chinese stocks. Now, this resulted in an astonishing 9% rebound in the Hang Seng Index, though we find the size of the move a little bit less surprising, given we pointed out yesterday in this podcast that the index was the most oversold since 1987. Now, this rebound does take some of the major technical pressure off the index, though now that the extreme positioning pressure has eased to some degree, markets are likely to count on actual policy delivery to build a more sustainable bottom. So to sum up, a Fed decision that's ultimately supportive for equities and a diversified investment allocation and a potentially positive policy turn in China. So two interesting moves. Just a reminder that Steve is in tomorrow with the Through the Noise podcast to help place these two events and everything we've discussed this week in a broader context. But we'll take a pause there. As always, if you've enjoyed this podcast, please don't forget to rate and like it. Thanks for listening. We wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.